This is the Friday, October 16th, 2015 version of the Market Plus segment. Joining us now is Dan Hueber. Dan, welcome back.
Thanks very much. Glad to be here.
Well, we're glad to have you. I wanted to talk about this cotton market before we went on to some of our Twitter questions. Up 224 this week. Big move in cotton. Is it sustainable?
You know, it was, of course, it all happened in one day, actually. And, of course, even that just brought us back to where we were about 3 weeks ago. You know, it was great to see. I mean, we had developed a new range, really had pushed the December contract down to new lows for the contract here several weeks ago. But boy, if you look at this cotton market, you know, we have, even at that low side there on a spot chart, we've been in this basic range now for 8 months. And you know, really just doesn't seem to have the life to come back out of here right now. I would tend to say that the little rally we saw was great and was a little bit of a warning shot that don't try to get too bearish here. We were down against this base, but the same token, I don't think we're headed anywhere significantly higher from here. In fact, I wouldn't be surprised we slide back a couple cents here over the next, between now and the 1st of November.
So 63, 64, good places to be making some sales?
You know, certainly if you want to make sales before the end of the year, I think 63, 63 and a half, go ahead and take advantage of it. You know, sub 61 and a half is probably about as low as you're going to get to the downside, though. So,
okay.
Yeah.
As we look out to next year, any changes that you're anticipating that could move the market one way or the other?
You know, certainly after this long of a period of stagnation, particularly when you consider that soybean prices hang in as well as they do, that I would think, yes, we're going to lose cotton acres again. I mean, cotton is, that's been a consistent pattern anyway. It's just a very expensive crop to produce, and I think farmers in the South, I can't really speak to California. They have their own issues with water and other things, but in the South, it's been more profitable to raise soybeans and corn, and you'll probably see more of a swing that direction.
Okay. Now, speaking of soybeans, we've got a question here from John in Jessup, Iowa. We talked about this a little bit on the program, but maybe you can go into some more detail.
Sure.
John's curious, if we've got $9 beans here during harvest, how high can they go later, either into December or into that first, second quarter of next year? You
know, and it's certainly great to see them back above $9 at this point, but I really think to make them push any further than they have, we're going to have to develop a problem somewhere. The most logical spot would be issues in the South American production. Yes, there's concerns at this point. I mean, none of them are significantly troublesome. I mean, yes, there's some dry areas, I believe, to the north and too wet to the south, but it is not to the situation yet or the concern yet where you'd really say we have potential to push beans to $10. Not that that can't develop. I'm certainly not going to try to predict weather, but you know, the Chinese demand is phenomenal at this point in time. That'll probably stay fairly consistently until they have a pretty good handle on what the South American crop is going to do. Because for them, I mean, really, there's 2 bean crops around the world. I mean, they can source beans 12 months out of the year from just about anywhere they want. If there is a situation where it becomes threatening down there, then yes, they would probably become more aggressive buying here. So that would be a double bonus, I guess, at that point. So
now, the Chinese buyers for buying U.S.-produced soybeans, they really hung back for quite a while and spooked this market quite a bit. In your mind, was that deliberate to buy at a little bit better value, or how were they thinking?
Well, you know, and of course, we were comparing it to the pace they were buying at a year ago.
True.
And at a year ago, they had no idea how, and nobody really anticipated a second record crop out of South America. So I think they had pushed many of the more purchases up into this neck of the woods. You know, this year they came in with, you know, a huge crop in South America, could feel a little bit more comfortable. The interesting thing about that, though, is even though the sales have been running behind pace, our exports, the physical export of soybeans, are now ahead of a year ago's pace. So even though they're not on the books, we are moving out more beans than we did a year ago at this time.
Is that because more cancellations last year that beans didn't get shipped, or?
I think that's just the logistics of the business. So
interesting.
You know, and of course, many of those sales, and as we know, they can push those sales forward.
Sure.
They can cancel them, move them to another country. So I mean, 2 in the hand's worth one in the bush, right?
Yeah.
1 in the hand's worth 2 in the bush. But I mean, it is a situation where, yes, I mean, we are physically really moving the beans out this year.
Well,
so,
good.
Yeah.
Good. Now, we've got a question here from Will here in Jasper County, Iowa. It was a great spot for corn production based on some of the folks I've talked to. He's wondering, with a good crop coming in, storage is an issue. Should a farmer keep ownership of grain or sell and buy call positions on bushels that can't be farm stored? What's the How much should you spend on storage this year?
The challenging aspect, when you look at the corn market, because there is carry, I mean, here from December corn to July corn, you're about 22 cents. So the market is providing you incentive to go ahead and store the corn. If you turn around and you sell the product, you buy a call option, you buy futures, whatever the case may be, you really are paying up for that premium. That's always a challenge to come by. One way that potentially a person can get around that or try to work within that is you put in a bull spread. You're long the front, short the backs, short the defers to try to capture that carry as it narrows a little bit. So you give yourself a synthetic storage gain by doing that. Then if you're going to use a call option, though, I think the only effective way to do it really is you're probably going to have to go into a little bit of a higher risk position where you maybe are long nearby in the calls, but you've got to sell some out of the money calls to kind of cheapen up that premium to help compensate for some of the time erosion and compensate for some of that carry that's in the market. So there's no easy set pat way to do it this year with the amount of carry that's out there.
On the soybean side, carry isn't nearly as substantial.
Quarterly, I mean, there is a minor amount of carry, but I mean, certainly not enough to say, boy, I'm really going to be provided a big incentive to store beans here. So, we've told individuals if you don't have beans priced, don't have the capacity for them, maybe a basis sale. Where you're going to at least collect 80% of the money up front. You can probably roll that ahead, ideally if the spreads narrow up a little bit down the road, but still gives you a pricing ownership of the product.
Gotcha.
So, yep.
Now, we've got another question here from Phil, our friend up in Ontario, Canada. And Phil says, a few weeks ago, December $4 corn looked real by December 1st. What happened? And then his follow-up is corn headed down into the January USDA report?
I tend to think we're going to stay back and forth. We could swing a couple times within this range, and yes, we got 397.5 or something here on this last bounce. So I mean, psychologically, that 4 was a challenge. There was one day, yes, it looked like it was going to push through, and then we just ran out of the momentum. So I wouldn't be surprised. Actually, yes, by December 1st, we could go back and try to trade it again. The pattern it looks like right now is maybe we'll be down into early November. We should have things oversold enough then to maybe stimulate a bounce again. Gosh, by November 1, we're probably going to be 75-80% done with harvest.
Yeah.
Yes, not that there couldn't be some hedge pressure, but it's certainly not going to be significant moving forward from there. So I wouldn't be surprised we get maybe a little Thanksgiving treat or something.
Okay.
So, yeah.
Now, we've talked a lot about corn supply yields better than most farmers had been anticipating.
Sure.
On the demand side, one of the stories we keep hearing about is how American ethanol is being exported to more and more places. As you look out into 2016 or perhaps the end of 2015, are there opportunities for value-added corn to be moved, whether it's ethanol or anything else?
It's really, at this point, it needs to come from that direction, most specifically because on a price competitive standpoint, yes, we are not in a great position around the world right now. And there is, Brazil produced that second crop was much larger than anticipated. They're normally not a threat in the export market, but they are this year. So it is again, in supply markets, the unfortunate side is, demand, it may improve slightly, but it is hard to be the real driver. You almost have to have a supply issue to really kind of get everybody off a dead center. And
just global stocks to use are
right.
So ample.
But the ethanol could be one of the bright spots there if we can see some pickup there. We spoke just a little bit earlier. There was concern that some of the wet conditions in southern Brazil could be impacting the sugar content of the sugarcane crop, which could impact adversely their ethanol production. So, it's hard to put a finger on any one thing that you could say, boy, this is really going to be the driver. But there is probably 100 things that are shaping up. And and again, here's what I do like about just commodities in general right now is that, we've been down in this kind of supporting period. It looks like we seem to find value from end users. Nobody's jumping out of their chair to buy ahead. But on the same token, I think we're at a point where at least we stabilize the markets. Not even unlike the cattle market here recently. You can only go so far before you bounce, and then you start bringing the value buyers back in.
Catch your breath and find places where it makes sense.
Certainly.
Well, Dan, thank you so much for taking the time to join us this week.
My pleasure. Thank you.
Thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we'll get expert analysis right to you. Thanks for watching, and have a great week.